Welcome to Beyond Just Money. My name is Samta and we have with us the Director of Research of 𝐊𝐚𝐥𝐤 Pty Limited, Ms. 𝐊𝐚𝐥𝐤 𝐷𝐿𝐿 as our guest speaker. So today we are going to discuss tips to identify the best stocks. 𝐊𝐚𝐥, welcome to Beyond Just Money. This is a question that I'm sure that all those who are investing in the markets or are planning to invest in the market have, with tens and thousands of stocks to choose from. How does one really select a few worth buying stocks? If you could just tell this to our listeners.
Thanks, Samta, for having me on this show. I'll start by saying that the lockdown stock play of 2020 is over now, and we are looking at revival and refurbishment when it comes to stocks to be looked at or watched by investors. So this is a very, very important question and a very good question because everybody is thinking of where to start from, which stocks they should be investing in, how to look at the market right now. So it's just not possible for investors to go through the balance sheet of each and every company to select the ones with a favorable debt position or improving net margins. So I'll quickly touch upon a few tips on picking the right stock when you're looking at broader portfolios. So Samta, the first and the most important thing to keep in mind to be a smart stock picker is to know your goals well. What is it that you want your portfolio to achieve and be determined to stick with it? We all know that purpose of investing in markets is basically to make money, but that should not be the only aim. One should be focused on generating an extra income of, for various goals in life over a period of time, whether you're talking about a short-term period, a medium term, or a long term. Now, if I have to talk about retirement scenario, emergency funding need, payment of short-term debt, home repair expenses, family planning, capital appreciation, preserving wealth, or for your children education, marriage or estate planning, and so on. So there are multiple things which people would want to achieve to do, and for this they need money. And how they can do it or how they can generate wealth, it's very important to have your right decisions made in a very, very informed and time oriented way. So that's what something we're going to touch upon today.
Right, 𝐊𝐚𝐥, like you rightly mentioned that one should actually have a goal before taking the decision to invest in stocks. And 𝐊𝐚𝐥, like how does each goal require a different strategy to invest?
So sometimes there are broadly three categories of investors, and again that is based on their goals in general. There are income-oriented investors that only want to buy companies or stocks, in companies that pay dividends on a regular basis. Then investors who focus only on companies that aim at, wealth preservation and have a low risk appetite. And they have a low risk appetite, and that way you go in for blue chip stable stocks. Then the third and the last category would be to say, to have a look at things wherein investors are looking at capital appreciation and are willing to take risks for a change of big profits. So here growth plays an important role. So deciding which category an investor falls in is easy, but then figuring out which stocks to pick is the tricky part. Now, for effective stock picking strategy, one should always keep their eyes and ears open. Stay apprised, as we say, with whatever is coming in the market. The pulse should be noted. The news and opinions should be considered. Qualitative research is also important while you are looking at quantitative side of numbers or quantitative side of analysis. It is not just about being aware of the market news, but also everything that's buzzing in the investment space, analysis, debates, and much more. Now, smart things like picking an ETF or exchange traded fund which tracks the performance of the industry you would want to invest in, and quickly glance the stocks that they're putting their money in or putting the funds in. That sometimes also helps. So different strategies investors would want to adopt, looking at the requirement basically. So one can also use stock screeners to filter stocks based on market cap, dividend yield, and other important matrices. But last, and I would say not the least, one should do a thorough research by visiting companies' website, know their management, go through the corporate presentations. That reveals a lot of things about the company and the outlook. Now, if I talk about how to select stocks, Now, there can be 2-3 basic criteria or to look at, because everyone will not have the in-depth knowledge to go through each and every line item when you're looking at statements or you're looking at, profit and loss scenario. But basically, what investors can do, that they can look at which stocks have, are backed by companies with sound fundamentals. So what are the liquidity ratios? What are the valuation ratios? What is the profitability and solvency ratios? So to say, today we have so many tools going around which can give you some insight on all these ratios. So at least you know what is the benchmark and where exactly a particular company is standing on. Then one can easily avoid companies with a huge level of debt to begin with, because that's where, sometimes the issues start or begin creeping in. Then it is always advisable to understand company's business model, which involves, understanding of its products, services, whether the products would stay relevant 15 to 20 years down from now, or there's an evolutionary phase which we have to understand that 5 years maybe the life of the product can be seen, and after that we eventually see the business might be evolving or moving in another direction, which would be a trending product or business service in the market. Now, furthermore, one can analyze what are the company's unique selling points and identify what a company is doing differently from its competitors. Also, one can check company's management, efficiency, qualification of people who are there. It would be, better to invest in multiple industries at a time and prioritize diversification. And that's why I always say that diversification is a very critical thing when you're looking at, investment or planning to invest in stocks. Now, it would be better to invest in multiple industries. We say that multiple different types of stocks, so to say. It's equally important to understand the company's scalability, whether, it be in a position in terms of financial context or business strategy perspective. So what are the, scalability levels there, which you can see. Overall, companies can be picked based on several quantitative and qualitative factors like growth drivers, risk parameters, profitability, what is the revenue trajectory, what is the industry comparison, cash flow scenario, business model overall, and forward-looking financial or operational guidance. So that is where the investors should start looking at. It may not be a very in-depth research always, because sometimes investors do need financial advisors, but overall, to begin with, at least to figure out stocks of interest, these things can be looked at in a very succinct manner. That's what I would say.
Thank you, Hina, for sharing your tips with our listeners to identify best stocks. And I'm sure that most of these tips and strategies that you've shared with us are very generic and easy to understand. And I'm sure it has helped our listeners to understand better. But to our listeners, if you need any, like Hina said, sometimes you need, guidance and advisory from people and from the organizations. So if you have any such query, you can get in touch with our representatives, and you may also log on to our website, which is 𝐊𝐴𝐚.com. And to listen to this podcast again, please log on to our media website, which is 𝐊𝐴𝐚media.com, and please subscribe to our YouTube channel. We have a lot of videos there and the past podcasts as well. So we will see you soon with yet another insightful episode of Beyond Just Money. Until then, as we say, stay apprised and invest wise with 𝐊𝐴𝐚, your best guide.